All right, welcome to your market update. Man, it has been a total roller coaster of a week, hasn't it? If you're feeling a little bit lost, kind of trying to figure out where things stand right now, you are definitely not alone. So let's cut through the noise and find a clear path forward. So here's what we're going to do. We're going to take a quick tour through all the key sectors. We'll start big with the global picture, then we'll dive into US stocks, check out what's happening with precious metals, and of course, crypto. And then we'll wrap it all up with what I think is the most important takeaway for you. Okay, first up, let's look at the big picture. After all that turbulence we just saw, the market's mood has, well, it's taken a pretty surprising turn. After those pretty sharp drops that were really fueled by all the inflation fears, we're actually seeing a big recovery. It really seems like investors are just shaking off those concerns. It suggests that the confidence underneath it all is strong enough to pull the markets right back out of that dip. All right, so with that recovery in mind, let's zoom right into the US stock market. Because the big question is, what's the right move? Especially when the ground feels like it's shifting under your feet. Look, despite a lot of talk about a potential major drop, the big indices are proving to be really resilient. I'm talking the Dow, the S&P 500, and the Nasdaq. They're all pushing higher. They're just continuing that positive momentum from yesterday right on into today. And this brings us to the really critical question, right? In a market this unpredictable, what is the best strategy? Well, the answer isn't about trying to perfectly time every single swing. It's about finding a solid way to work through all this volatility.
The approach we're recommending for this kind of environment is a classic for a reason. It's a disciplined one called dollar cost averaging. You've probably heard of it as DCA. The beauty of it is, you don't have to be a market genius. It's all about consistency. You just invest the same amount of money on a regular schedule, no matter if the market's flying high or taking a dive.
And the real power of this simple three-step process is that it completely takes emotion out of the game. When you invest systematically like this, you naturally end up buying more shares when prices are low and, well, fewer shares when they're high. This just smooths out your average cost over the long run, and it helps you dodge all the stress of trying to time the market. It's all discipline, zero drama. Okay, next up, let's switch gears to precious metals. Because right now, gold and silver are telling two totally different stories. Think of it this way. Right now, gold is playing defense, and silver is on offense. For gold, the strategy is to be patient. You accumulate it as that long-term store of value, buying the dips. But silver, that's the momentum play. It's got higher potential for some really dynamic near-term price growth. And here's the really interesting part, the evidence that backs up this whole silver momentum idea. Just look at the gold to silver ratio. This basically shows how many ounces of silver it takes to buy 1 ounce of gold. It hit a recent peak up near 91, but since then it's totally reversed and started to fall. And a falling ratio? That typically means silver is outperforming gold, which just reinforces its role as the growth metal right now. So, to wrap this up, the play is to favor silver for that potential growth, but keep building your core position in gold. Just do it patiently, buying on the pullbacks. And hey, here's a really important practical tip. Try to avoid buying physical metals if you can. Those commissions and fees, they can be crazy high and just eat up your returns. Things like ETFs or digital holdings are often a much more efficient way to get in on the action. And last but not least, let's talk crypto. The strategy here is actually super clear, but it all comes down to one thing. Are you already in the market or are you on the sidelines looking to get in? Yeah, the near-term plan here is all about one word: patience. If you're already holding Bitcoin and Ethereum and you're on a weekly buying plan, just stick to it. Wait for your next scheduled purchase. But for new buyers, now is not the time to jump in. You gotta wait for a pullback. The same logic really applies to Ripple too, although a strong break above its resistance level could be a buy signal. But until then, the name of the game is simple. Hold if you're in, wait if you're out. Okay, so we've hit stocks, we've hit metals, and we've hit crypto. Let's pull all of this together now with one final, and I think really crucial point for every single investor out there. The one central theme that's weaving through every single market we talked about is this: things are getting more complex. You have different assets moving for totally different reasons. And because of that, just trying to hold on to the value of your money, well, it requires a much more active and informed strategy than ever before. And it really brings to mind that famous quote from Benjamin Franklin, right? An investment in knowledge pays the best interest. In a market this complex, your absolute best tool is knowledge. Truly understanding why you own what you own and knowing the role each asset plays in your portfolio, that is the ultimate key to navigating whatever comes next. So that leaves us with the big question you need to ask yourself. With stocks heading down one path, metals telling a story of two totally different strategies, and crypto just demanding patience, is your portfolio really, truly ready for all these diverging roads? We really hope this explainer helped bring some clarity to what's going on in a pretty complex market. Thanks so much for joining us. And hey, if you found this valuable, we'd really appreciate it if you hit that like button and subscribe for more insights.